Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. Let me display the PowerPoint presentation. Asian session live market analysis on September 19th between 5 and 5:30 GMT. So we will track the market using the live market code page. So in the live market code page, we will see the initial highs and the lows set and also current market level, and understand what is the net change they are shown from that of Friday close, and that will help us to read the intentions of the players. Let me give the link for the live market code page. I'll also focus the camera over that of the live market code page. Currently, euro is trading around 1.3662, 1.3664, 1.3648 is the low, 1.3750 is the high, and which is lower than that of Friday close, and you come across 132 pips negative net change. And in the case of GBP, 96 pips negative net change is seen. This trading around 1.5695, 1.5699, 1.5686 is the low, 1.5763 is the high, and the high is almost closer to that of Friday close, and they have made a lesser drop of 96 pips yesterday, during this particular session, when compared to that of euro. So this is what they try to do it during the week beginning, and when there is a gap opening, like any other market, people expect the retracement and fill the gap, but the players have got a different agenda, and they may not fill the gap today, and from here they could drop further down during the day and induce the long holders to liquidate, and tomorrow they try to make the rise. Since it is a 24 hours market, so all the rules what we just derive out of other markets may not be applicable to forex market, because the players have to handle similar to that of three stock markets. So Asian market, European market, and US market. And whenever the people come active, and they have to trap them on all the three areas, and only then they can make the alternative moves. So there is a difference when compared to that of the stock market to that of the currency market. This I am just giving it based on the type of moves they make it during the day. It's not my own invention or something like that. It's a keen observation on how they handle situations with which I was able to derive it. And GBP is trying to trade at 1.5695, 1.5699, just below that is the psychological level 1.57, so that it could create the bearish feel. And in the case of yen, it is hovering around the same area, 76.89, 76.92, 76.88 is the high. You know that last week, for the last 3 days, they have been holding below that of 76.85, and now they have gone above that of 76.85 and trading around 76.88, 76.97. Still 9 pips spread and 11 pips net change from that of Friday close. So they are simply consolidating it. I think mostly they are waiting for the month end, the derivative expiry, and try to handle the market during that time in a very big way. In the case of CHF, it is trading around 0.8821, 0.8824, 0.8791 is the low. They went all the way to 0.86 in order to accumulate the positions, and they had gone to 0.8832. 70 pips positive net change is seen. They are expected to make an upward move up to 0.90 in this particular pull. Then in the case of Canadian dollar, they went down to that of 0.97 area, from there 0.9838, 0.9842 at the current level, 0.9770 is the low, 0.9844 is the high. 59 pips positive net change is seen. When compared to that of CHF, Canadian dollar is making lesser gain because they wanted to handle the CHF CAD cross as well. Then in the case of Australian dollar, as we know that it is undergoing the multi-year trend reversals, So it is currently trading around 1.0235, 1.0238, 1.0226 is the low, 1.0369 is the high, and it is already showing about 123 pips negative net change. And today they could make further drop in the case of Australian dollar, and they are just reversing from that of the multi-year levels. So any level long holder thinking that, okay, this drop is good like a normal market, it will have a pullback and come down, and they try to trap. So they create the sentiment and act against that of the traders. They induce the traders to believe that the market respects the technical analysis, and near the support induce the traders to take buy positions and later on trap it. So it is a very easy way of doing this. It is like acting that they are very close friend of yours, so that you trust them as a friend and try to take the guidance and try to see that they are showing respect to that of the support, and the traders find that, okay, we can buy here, and later on they make a small pullback and drop it, and then we give a fundamental story that Australian economy is very weak, so that is why Australian dollar dropped. So we discuss about technical analysis, suddenly jump to that of fundamental analysis. So this is the way we get convinced and cheat ourselves. So you come across that there is a drastic downward gap opening and further downward moves in the case of all the numerator currencies, but the denominator currencies have made only a nominal gain. As a result, you find in the case of crosses, Euro CHF, it's showing about 31 pips negative net change. Euro GBP is showing about 35 pips negative net change. And Euro Yen and GBP are also showing negative net change because lesser gain in the case of USD Yen. So you find that the crosses are also handled by making lesser rise in the case of denominator currencies when more drop is shown in the case of numerator currencies. So later on, they are expected to make the pullback in the case of the crosses as well, and the yen crosses especially. They are expected to make the gain quickly, but they are expected to make the wild moves, quick rise and a quick drop again, quick rise and quick drop again, and then subsequently breach the high and go above. That sort of moves are expected in the case of GBP and Euro Yen. So trade carefully because the market is undergoing multi-year trend reversal move. So you will come across such wild moves happening in the market, and the whole of this week, this sort of moves just quickly gain about 100-150 pips for a simple flimsy reason, or suddenly drop about 100-150 pips for some excuses. They are all the type of moves we will come across. But the currencies which are undergoing the multi-year reversals, they will continue to make the USD gaining move. So then you will be able to understand, okay, they just created the confusion using Euro and GBP, but silently they just made continuous USD gaining move in the case of those currencies underwent multi-year trend reversals. Let me go back to that of the PowerPoint presentation. So now I'll explain the expected market moves for today. During Japanese session, volatile moves and slide. For the slide or the expected move. Then again, the quick volatile moves could be seen during the start of the European session, and it may appear that Euro and GBP could recover quickly and fill the gap, but suddenly they will slide again towards close of the European session, and then US session, they could make further downward move and volatile moves on the downside and quickly gain the levels when people think that it could drop further down. So they are expected to create the unexpected moves for that of the traders. So keep in mind, the market is known to make such moves, and very volatile moves may be seen to come out of multi-year levels in the case of USD and USD CHF and Australian dollar. And sudden moves are mainly to induce the traders to find that, okay, this is a good support, you buy. This is a good support in the case of Australian dollar, buy. That is how they induce them to buy and suddenly make a gap opening and then induce them to do the averaging. Third gap opening, they will realize that, okay, there is no more buying in the case of Australian dollar. They are expected to drop it further down. Then after the drop, when the resistance, the support becomes resistance, traders start selling it and they make very quick upward move and drop further down. So they are known to make such moves. Be prepared for that and try to use the hedging to limit such a risk for the equity. And we cannot outsmart the players because they have got a huge money power. And for that, Euro and GBP are expected to make either way quick moves. So one such quick move, we have seen it on the downside, and we could come across very quick move. What they had done it last week, that they made a very quick rise in the case of Euro to 1.39. Now we can understand why they had done such quick moves. So quick moves are false moves in the market. And after making a quick move, they'll make one more quick move and then reverse. So that you need to understand, because when they hold Euro around that 1.36660, people think that, okay, this is being supported. But the next session, people, they will induce them to do the selling by making a drop, then afterwards gain the level. So they all the time do the tricks. So what are the expected moves for subsequent days in this particular week? On 20th, we could come across more of USD weakening move. So they could open low and start slowly gaining the levels throughout the day. And on Wednesday, 21st, they are expected to make the open high and drop again. And on 22nd, they are expected to make a very aggressive gain in the case of Euro and GBP, and probably 21st, the FOMC meeting minute could be used as a trigger, and 22nd, they are expected to make a very aggressive gain in the case of Euro and GBP, and again on 23rd, they are expected to make further gains in the case of Euro and GBP. So you could come across the USD gaining move for the first 3 days and followed by that USD weakening move in this particular week. Then the last week comes 26th to 30th. We could come across more aggressive gains in the case of USD. The sleeping giant could get up and show astonishing levels in the market. So let me go back to that of the initial lows and the highs. In the case of Euro, 1.3648 was the initial low that has not been breached. 1.3750 is the high, and market is hovering around that of the low, still not breached the low, and towards close they are expected to breach the low and make further downward move during the early European session. You know that the net permissible level 150 pips, sometimes 200 pips. So you just watch and afterwards you can initiate a buy. I'm not bearish. I hope you are able to understand. You just allow them to make one more drop, then you try to take a buy and still use the hedging order to limit the risk. Then in the case of GBP, 1.5686 is the low. Still they are not breached it, but still holding around that of the low, and 1.5763 is the high, and that is quite away now. So they are expected to make further downward move little bit in the case of GBP and Euro, just to create the bearish sentiment. And you know that they create the sentiment and act against the traders. But during the further gains in the case of Euro and GBP, USD CHF and USD Yen may not make the corresponding move of making a further drop. In the case of CHF, after a continuous rise, they made one pullback and they are expected to continue the rise again. And in the name of S&B stories, whatever it is, then 0.8791 is the low in the case of CHF, and 0.8832 is the high. Still they are not breached it. They are, even though holding above that of 88. So they are expected to continue to gain in the case of USD CHF. Then yen, again, as I explained, suddenly they could make a downward move in the case of USD yen. So at that time, you try to take a buy because the spread is very narrow and there's no point in taking a position and simply holding it. Because we traders expect profit as quickly as possible. Then Australian dollar 1.0235 is the low, and they breached the low. 1.0226 has become the new low. 1.0369 in the high, and already about 131 pips negative net change they have done it. So they are expected to make further downward move to 1.02 area, a breach psychological level of 1.02, and then hover around there and make further drop. And once they just go below this, you know that they are expected to stop it below parity. And in the case of Canadian dollar, 0.9770 is the low and 0.9844 is the high. They breached the high and staying above, and currently trading around 98.39 near that of the high. 98.44 is the high. 60 pips positive net change is seen. When Australian dollar dropped about 130 pips negative net change you come across. 60 pips gain alone is seen in the case of Canadian dollar. This is mainly to handle Aussie Canadian dollar cross and the crosses of the commodity pairs. Then subsequently they are expected to gain more in the case of Canadian dollar, drop in the case of Australian dollar. And you know very well the commodity pairs led the rally. Let me minimize the PowerPoint presentation and take up the questions which are asked here. I'll meanwhile focus the camera over that of the live market page. Then Sajid has got a question. How do you estimate about yen crosses, Euro yen and GBP yen? Do you think it will rise in the near future? They are expected to make one downward move and then rise, Euro yen and GBP yen. So already you come across about 85 pips negative net change in the case of yen and GBP yen about 43 pips because a lesser drop in the case of GBP and probably a brief downward soften since they are holding it near that. So when they make a downward soften, you try to buy and keep 50 pips hedging order in the case of crosses. Okay, glad to know that Anil has made the profit and see that consistently you make profit without emotional binding. There comes the importance. And after the drop, don't try to do selling. That is how they will just induce you to do that, but control your emotions. Then the answer. There is a reasonable chance that the same thing happened last Monday. Europe comes in, takes it a bit lower and then shot straight back. Yes. But this time around, during the weekend, last week, they gained the levels and dropped it for Friday. This week, they are expected to lose the levels and then gain back. So that is how Euro and GBP are expected to behave. Then Robert, in my idea about players, correct? My idea about players is correct. They may start to do stop-ins to buy all the sells for next month to show a rise. Yeah, that is what they are doing it. And so they drop and buy and just gain the levels quickly, book profit and again drop it. And so that when market is trading around 1.3660, their average buy level will be around 1.30 with a profit. So that if there is a sudden eventuality happens in the market, natural calamity or any other aspect beyond the control of any of the government, then the market might show a knee-jerk reaction. Even then, they do not want to lose money. That is why they do this churning. They just gain the levels and book profit and drop again, gain the levels, book profit and drop again. And every time about 200 to 300 pips profit. When it is added to that of the buy levels, the buy average comes down. So this is simple arithmetic calculations They try to do it and earn money from the market. And they are very, very careful when they are investing billions of dollars in the market. They do not want to just like that lose that money. See, even a small trader, when you just open an account with $500, when the margin call comes, we are not able to withstand. So understand, when they are investing in billions and billions of dollars, can they afford to lose it? They will not. They have to take all the precautionary measures. That is what they are trying to do. They do their job effectively, and we need to identify what they are trying to do it and try to trade along with them, rather than trying to focus on something else about the economic conditions of various countries. From Friday to Monday, or from last Thursday to today, what change you come across in the case of euro? What change you would have seen in the case of, has the commodity prices gone up, or any of the consumer durables have gone up or come down? So they simply create the hype. So that we need to understand. Then down. Please, outlook of USD CAD. Also, do you see euro testing 1.18 and 1.67? Such extreme questions I do not want to answer. USD CAD is expected to trade above parity. And I'm not envisaging euro to come to 1.18 or 1.16. They are all extreme imaginations according to me. Then ROM. Will GBP go still further down? May not be much. Intraday they may trade and settle around 57, 1.57. As you always say, quick moves are false moves. Is it possible to wait for area around the bottom and counter trade? Yeah, you have to do that. That's what I've been telling you. So whenever there is a quick upward move, on last Wednesday, Thursday, they made a very quick upward move and then stop cutting the high. And you know that I explained, whenever there is a spike on the upside, it is an extended move. On the downside, it's an extended move. And either if they reach 150 pips around that as the net permissible level and stop cutting the high for 2 hours, then try to take a sell position. Similarly, try to take a buy position at the bottom. So you can do that. So there is no hurry to take a position. That is what I am trying to tell you. So only those who have got enormous patience, they wait calmly and expect the players to do all the play what they want. Then afterwards, silently take a buy position after 2 hours, or silently take a sell position after the rise after 2 hours. Then they are able to easily make money. Whenever there is an extended upward stop, extended move on the upside, okay, we know very well the next day they will make the intentional move. So today they are making the intentional move of making a drop. Then afterwards, tomorrow they are expected to make the extended move. And that you'll be able to understand. So in the extended move, quickly they will gain the level and then drop and slowly gain the level again. So that is the way they do it, in a very systematic way. So that is why I have been telling everyone, or suggesting everyone, that instead of following the levels, try to follow the moves. You will be able to understand what is going to be the next move. Then you will not ask me any question in the webinars. I am 100% sure if you are able to track the moves, you will trade independently on your own and you won't be requiring any person to guide you. But still, the mind, no, is not accepting it. Then Smith. From Tuesday and Wednesday, we could see also Australian dollar to gain parallel to. No, Australian dollar is not expected to gain parallelly much. It is expected to continue the downward move because one more week is there for it to come below parity in this month. Then ROM. You mentioned USD will gain aggressively in the last week. And what will happen to Euro and GBP? After the gains, they are expected to drop to the current level, but it will look again bearish. So that is the cleverness of the players. Then Robert. Dear all, I forecast 1.39 as a good profit target for our buys in euro. Okay. Then M-Drive, please explain weekly moves again. I'll show it in the PowerPoint presentation and explain it. Then Soma, what is your view on INR? USD INR is expected to hold weak till first week of October, and afterwards it is expected to gain again. And you know the regional currencies are the one, they are to make the moves ahead of the majors. If we carefully track it, we will be able to understand the regional currencies make the moves first in the trend reversals. So once the regional currencies become stronger, later on they go into that of the commodity pairs, then to that of the majors. That's how they do it. Then if Australian dollar expected to drop, do you expect oil prices to drop? Oil is expected to hover around, oil, gold and silver are expected to hover around the current levels, and once in the last week of the month, they are expected to undergo the corrections. But the players are now focused with regard to the currencies which have undergone multi-year moves. Keep that in mind. Then how is Euro GBP today, Jason? Euro GBP, they have come to that of 0.87 area. So currently 0.8718 is the high, 0.8692 is the low. They are holding it closer to that of the low, around the psychological level 0.87. And any pullback to 87.20, 87.30, you can take a sell, and they are expected to drop it. Because less drop in the case of GBP and more drop in the case of Euro. Pico. Is this week good for position trade? Probably next week will be good for position trade. This week you can take positions and close it by weekend. Again, next week drop, you enter long again in the case of Euro and GBP. Then book profit towards close of that week. And again, first week of October, they are expected to make one quick drop and then later on gain the levels. During the drop, you try to take buy position, hold it calmly to close by end of October. And like Anil said, everybody will say, I have booked about 600 pips profit, 700 pips profit, etc. But you need to have the strategy. After taking a buy position, keep stop at entry, calmly wait or trail the stop. Don't blindly take the position and say that you are given a wrong forecast, etc. Because that doesn't help anybody. As long as you are taking the position, you should be able to handle it properly by yourself. Because I won't be knowing how all the traders are taking the positions. I can only give the suggestions and ideas, and you have to implement all those ideas. I cannot come to everybody's place and try to do it. I'm not omnipotent. I am an ordinary person. I am trying to help people by giving the ideas, and it is up to them to use it fully. Then BTPT, how much downward move do you see for Australian dollar? I explained that Australian dollar is expected to come below parity. Matthew, can we judge the type of moves by using live market? Yes, that is the ideal tool to identify the live market. Live market quote page is the ideal tool to identify the type of moves, because for the type of moves we need the time frame. Whether it is a 30 minutes move or 2 hours move, and every 30 minutes how they are making the moves, whether it is a swing between the high and the low, or above that of the high, below that of the low, and how long they stay above that of the initial high, or how long they stay below that of the initial low. For that we need the time. So here you come across the time frame easily. So when it is, say for example, around 528, if it breaches the low, for example, doesn't mean that 528 you have to note and wait for 30 minutes. You just note down 530, and up to 6 GMT, you just watch whether they come above that of the initial high, low or not. If they breach the low and stay below that low for more than 30 minutes, so that is 530 to 6 GMT, then they intend to make further drop during the late Japanese session. So to know the various sessions, we need the GMT time. And in the charts, you can set the GMT time, but it is a continuation, continuation for several days. If you go in for a longer time frame, like a 4 hours chart, 8 hours chart, or a daily chart, etc., it's a long duration. Fine, long duration is fine, but the market is expected to make moves depending upon current positions of the traders. And I doubt very much whether somebody has taken 1 year back some position and trying to come here and sell. If you try to make the moving averages of 200 days, that means 200 days that move back, somebody has taken a buy position or a sell position. He is coming for unwinding of the position. Even in currency conversion, if you take into consideration, they come for redemptions. They will not do it in a hurry because they are doing non-leveraged trades. So they can simply hold a loss-making position for several years. So there is no urgency for them to liquidate, because only in a leverage trade, when the market goes against them, the usable margin comes down, then they have to just liquidate the position. So understand that we are using the charts without understanding why we are using it. Then M-Drive. Gold has made its downward move already, yes. But it will make visible downward move once other currencies make it, and when the sleeping giant wake up and just show his figure, a huge figure in the market, then gold will also come down. Then Robert, will US stock market continue recovering? Yes. Next week, you'll come across aggressive gains in the case of stock markets. Then Robert, and can we as a public do good for the world by spreading understanding about players? No. Probably, no, you can do, but it will have very little impact in this. See, you have to understand one thing. See, certain things which are under our control, certain other things are beyond our control. Say, for example, an earthquake or a tsunami and things like that is beyond our control. We can only identify when it is going to come, or sometimes we may fail to identify. And the disastrous effect of such things we cannot control. So you know that there is a supreme power above us which will take care. Then Sandy. You know that there are so many dictators the world has seen. So I do not want to go into the history. There are so many dictators and rulers in the world. They wanted to conquer the entire world, out of greed. And you know that they are not immortal. They also perished. So in the same way, in the financial market, you do come across such dictators. They try to conquer the entire world. And they will also have an ordinary die, similar to any other human being. Then Sandy, Euro USD can come up. Yeah, it can come up tomorrow. Then M-Drive, Euro made 140 negative net change. Is it expected to make further drop? Yeah, they could make further drop because European session they have to take some more drop in order to induce the bearish feel in the market. Probably they may go below that of the psychological level 1.36. Then the fear grips in. That is revisiting 1.35. Then people will be afraid to buy, but the players will buy and take it up. Then DDPT. USD CHF and USD CAD, what levels are expected during the rise? So USD CAD, I said that they are likely to go above parity. And you could come across CHF to come to 0.90, then 93, sudden jump to 97 and above parity. Sudden jumps, knee-jerk jumps are expected in the case of USD CHF because it has to come out of this multi-year levels. Yeah, I'll give the forecast for this week. Let me go back to that other PowerPoint presentation. So today all the sessions are expected to show volatile move to start with. But more important for us is how far they go down. Then try to take a buy. But you may not be able to book profit immediately today, but tomorrow you can book profit. And or during the US session, a nominal profit. So volatile moves and the slide are expected during that of the Japanese and the European session. US session, they are expected to make the volatile move and the rise. And in this particular week, today is Monday, Tuesday and Wednesday. Part of Wednesday, they are expected to make the USD gaining move. And from mid-Wednesday to Thursday and Friday, they are expected to make the USD weakening move. Then again next week, we'll come across the USD weakening moves to start with and then USD gaining move for the month end. Hope you are able to understand the cycle now. So any level you've got to buy and sell. If you calmly wait, you will be able to book profit. So that is what I wanted to say. I have been telling it from the start of this month and last month. They are expected to be in the range. And only thing is, you will come across market rewards patience as far as Euro and GBP are concerned. But those currencies which are undergoing the multi-year reversals, there you may not come across the patience getting rewarded. So if you have got a sell position in CHF around 0.75 or 80, you may not be that you should be able to understand. Similarly, Australian dollar, if you have got 1.08 a buy position, you may not be able to see because they are all multi-year levels. Once in multi-year, such levels will be shown in the market by creating euphoric conditions. Not all the time. People will, if they rise it to 1.10, do you think that you will buy? No, not at all. You will sell. They know very well. So they won't show it again. That is the trick of the game. So I take this opportunity. Thank everybody and also FX Trade for this opportunity. And I will come again tomorrow and review the market and let us see how exactly they are taking the market up and down alternatively and try to plan our trades accordingly. See you tomorrow. Thank you one and all.